This bank stock got fucked a whopping 33%, all thanks to factors entirely outside of its own control. And thanks to that buying opportunity, I was able to buy a position of almost 10% of this portfolio. And in this video, I will explain to you why I have done so. Now, before that, real quickly, welcome to my value investing model portfolio series, where I'm investing real money with a value investing mindset to build up a track record over time. Today is the 11th episode and we'll get right into it with first, the transactions. Transaction number 1, we sold the remainder of our UWMC stake, 200 shares total, for roughly 950 euros. Now, I've explained the reasoning behind my sale in this last episode of this value investing model portfolio series, so I would highly recommend checking that video out. Quick sidestep, we sold the original stake of 700 shares for a 605 euro profit, which equates to roughly 23% in profits over a 5-month period. But in short, I sold this company because I believe it's trading reasonably close to intrinsic value, and therefore I believe there are better opportunities out there. Like transaction number 2, where we bought an additional 10 shares of Clearfield for $43 per share. Clearfield is actually a company that produces and sells fiber optic equipment. But most importantly, they're growing their earnings at a pace of 25% per year. That while the company is trading for a price to earnings ratio of just 10. Peter Lynch's rule of thumb. When a company is trading for its growth rate, it's likely fairly valued. And when it's trading for a price to earnings ratio well below its long-term growth rate, it is likely undervalued. And I believe the latter to be the case for Clearfield. I personally have a $100 price target for the stock, while it's currently trading for about $42 on the stock market. Currently, Clearfield makes up 31% of this portfolio. Next up, transaction number 3, we bought an additional 10 shares of Porsche SE for 51 euros per share. This is basically a holding company which holds twice as many shares in Porsche AG, the car manufacturer, and Volkswagen as its share price is worth. So basically, I'm getting $2 in car stocks for every $1 invested, and therefore also twice the amount of capital appreciation and dividends. Not a bad deal in my opinion. Porsche SE currently makes up 16% of this portfolio. And that leaves us just transaction number 4, where I purchased a total of 40 shares of Bank OZK for roughly $35 per share. Why have I done so? Well, that is a really good question. So let's talk about my reasoning behind OZK. Basically, I believe Bank OZK should be worth $60 per share at this moment in time, based on its intrinsic characteristics, based on its fundamentals, which by the way includes relatively modest future growth rates and future price to earnings multiples. And it also includes a very conservative discount rate of 15% per year. So I believe I'm getting a tremendous deal on OZK at about $35 per share. I believe I'm getting a short-term upside of about 70% while I'm getting relatively little risk. And all of that is possible because of the recent banking failures. Without First Republic, Credit Suisse and some of these other banking mad lads, Bank OZK would have never been so cheap. Moreover, the best part is, Bank OZK has always historically been a very conservative bank. During 2008, the company acquired multiple banks for pennies on the dollar. And now, if this crisis becomes more severe, the bank might be able to do the same again. So, like I said, very little risk with significant upside. And that is why I bought Bank OZK. Let me know if you want me to do a deeper dive separate video on Bank OZK. Next up, we should talk about the current holdings. And well, those holdings are these stocks with these amounts. I do want to highlight that we are expecting significant catalysts for both Clearfield and Base Resources reasonably soon. As in, we're expecting an earnings report for Clearfield on the 4th of May 2023, which is just a couple of days from now. These earnings reports are always a great moment for timing a buy or a sell, especially if the markets overreact one way or the other. So Clearfield's earnings are dropping on the 4th of May 2023, and Base Resources just dropped their earnings today. but we're specifically waiting for drilling results on that stock. And if those catalysts are significant enough, we might be selling some shares of those stocks reasonably soon. The two stocks that I believe are most likely to stick around for a while are Bank OZK and Porsche SE. There are no real catalysts on the horizon, but the value is there. Google is starting to trade closer to intrinsic value, and they have just dropped a positive earnings report. So on this one, we will have to wait and see. And ASTS, that is a really tough call. We've sold enough shares over time that these 100 shares are basically free. But this company is still pre-revenue and they don't have any significant cash flows on the short-term horizon. It was originally a swing trade, so I do plan to exit this position eventually. Now there's just one more topic to discuss: the comparison. And that comparison has just become slightly negative. We are underperforming the golden benchmark, the S&P 500, just slightly at 1.3%, and we're underperforming holding cash at about 0.7%. This makes sense as we're down about 1,500 euros on just our Clearfield position, and base resources is also up there. So what else can we expect? Value investing in essence is quite volatile. I believe this volatility of first overperformance, then underperformance, and hopefully soon overperformance again will persist. But of course, hopefully we return to overperformance reasonably soon. And that's about all I have for you guys today. I will see you guys again in 2 weeks time for the next update in this portfolio series. But before that, real quickly, time for a classic YouTuber disclaimer. While I am a registered financial advisor in the Netherlands, I do not have the legal capacity yet to give anyone investment advice. Therefore, this video and any other video on this YouTube channel can never be taken as financial advice. I cannot be held liable for the losses you make while trading according to my opinions. Please do your own due diligence. And with that said, thank you so much for watching. I love you all. Peace.